I must compliment Hakan simply because he flagged a number of issues this morning in his welcome speech. And the points that he flagged are so important over the last 5 decades. Out of green revolution, the fine cereals, rice and wheat, and of course, maize out of the coarse grains received a lot of policy support, a lot of investment support, and of course, a lot of research support, which most unfortunately, pulses lacked. For what this crop needs, this most nutritious leguminous crop needs is one, policy support through government. It needs investment support through the industry and trade, and it needs research support through networking with research organizations. I thought I must mention this so that, as Hakan mentioned, we need to take this trade and industry to the next higher level. Let me start with my first slide. My friends there, would you? Okay. All right. Sometime last September, September 2013, I request you to wind back by 6 or 7 months. Go to September 2013. I wrote an article called 5 Global Uncertainties Every Commodity Trader Ought to Know. What are these 5 global uncertainties? If you wind back by 7 or 8 months, there was a certain situation which obtained then. And of course, there have been changes over the last 6 months. And I just want to very quickly take you through what these uncertainties are and what they were 7 or 8 months ago. One was the uncertainty of global economic growth. Obviously, the world over 2010, 11, 12, and 13 did go through an extraordinary amount of slowdown in economic growth, particularly under the lead of the United States, which is the engine of world economic growth. The US was certainly slowing down. There were also apprehensions of slowdown in China. Europe, as all of us know, has been going through a lot of turmoil. The next one was geopolitics. Look at what happened in 2011, 2012, 2013. A large number of geopolitical instabilities, as I would call, in West Asia, North Africa. I don't have to go into the details, and you all know how these affected and created uncertainty about crude oil supplies and how prices started to rise. And all of us also know the relationship between crude oil prices and agriculture cost of production. The third uncertainty related to monetary policy. Particularly, I want to refer to the US Fed monetary policy, the quantitative easing. The QE3 that was announced 2 years ago meant the Fed would buy $85 billion worth of assets month after month. And that continued for the whole of 2012 and continued until almost the end of 2013. Sometime in June 2013, the Fed started to say that US economy is beginning to improve, and therefore they'll review this purchase of assets, and therefore that would obviously have an impact on global liquidity. The commodity boom that we found over the last 3 or 4 years, whether it is crude prices or gold and silver prices or base metals prices or even agriculture commodity prices, primarily resulted from liquidity-driven commodity boom. The price drive was actually influenced by huge amount of liquidity in the global monetary system, and that's exactly what drove prices higher. And now that the Fed has decided, and it decided by the end of December, and started to give effect to what is called tapering from January onwards, obviously liquidity is now going to begin to shrink. And obviously that's going to have an impact on commodity prices, and therefore today there is a lot less uncertainty or a lot more certainty about the monetary policy around the world. Also, I want to contrast, I want to suggest to you, look at the contrast between a leading economy like the United States, which continues to follow a loose money policy, and developing economies like India and China, which still have what I call a tight money policy, or the cost of money is rather high, because the priorities are different for these two countries. And therefore, the monetary policy of different countries, whether it's the US or developing countries like China and India, are in some way contrasting. And this contrasting monetary policy of large economies also creates a certain volatility in the marketplace. But today, I think the monetary policy, there is a lot more clarity, particularly from the US Fed. Currency gyrations, obviously, all of us know that how the dollar has moved in the last 3 or 4 years, extraordinary amount of volatility that the dollar has seen. And currently, of course, notwithstanding the decision of the US Fed to start tapering, notwithstanding the positive macroeconomic data that comes out of the US, after all, the US is the engine of global economic growth, the dollar is still, in my opinion, relatively weak. For instance, vis-a-vis the euro, it's at about 1.38 to the euro. What will happen to the dollar over the next 2 or 3 quarters? That's something, let's wait. I think probably I'll deal with it at the end of this presentation. So currencies have had a big impact, particularly look at the Indian rupee. Indian rupee has been on a yo-yo ride over the last 1 year or so. And there is so much of uncertainty relating to cost of imports, particularly of agriculture commodities. And therefore, currency gyrations fluctuations have been a part of the uncertainty which every commodity trader ought to know. And of course, the weather. There's the fifth uncertainty. 2010, 2011, 2012, all of us saw serious weather aberrations in some part of the world or the other, which affected agriculture commodity production, which actually raised agriculture commodity prices, which attracted a lot of speculative capital into agriculture commodity futures. And obviously, the organizations like FAO were rather concerned about high food inflation. And I think the denouement was, of course, the US Midwest drought of 2012. Fortunately, 2013, the world saw absolutely benign weather. And because growers in developed economies received good prices, remunerative prices in 2010, 11, and 12, they had much better input management in 2013, and the world saw a major rebound in agriculture production. Obviously, prices turned a lot more weaker and a lot more benign, a lot more consumer-friendly. So these are the 5 major, uncertainties that every commodity trader ought to know. I'm sure you're all in business. I'm not in business. I'm a student. I'm an academic, but I'm convinced that these are the uncertainties that every commodity trader must track and keep an eye on. But there is one more. There is one more uncertainty which suddenly developed last year. And what is that uncertainty? That is the uncertainty of transport logistics. Did anyone expect until early last year that Canada would face such serious logistics issues? And that's something out of the blue. But anyway, even that's probably going to be an additional risk factor or uncertainty in the coming years. And I hope this uncertainty is addressed sooner. Sorry. Okay. Recent weather events is something I want to talk about. We've had, since February, dry conditions in Brazil and dry conditions in Southeast Asia, particularly in countries like Malaysia and Indonesia, which are very large producers of palm oil. Eastern Europe, in and around Poland, has also been facing dry conditions, and parts of Australia are facing dry conditions. This is something which has developed in the last 2 or 3 months. It is yet unclear how long this is likely to continue. But now the big talk is about El Nino. Let me assure you, El Nino is not here yet, but it's certainly looming. There is a threat of El Nino which we need to take cognizance of. But yet, because of this threat of El Nino and dry conditions in Brazil and in Southeast Asia, speculative funds have already rushed into agriculture commodities. Did you know coffee prices are up 60% since the beginning of this year? Soybean and sugar prices are up 10 to 12% since the beginning of this year. Cotton prices are up 10%. And corn prices are up probably 8%. In fact, there is a huge amount of speculative capital which has entered this market based on their perceptions of how the weather is going to turn out. And therefore, in the futures market, long positions have been built. and a number of major agriculture commodity prices have spurted simply because of expectation that the weather would be adverse and would affect production. Look at prospective plantings, a report that came out from the US, particularly on last month sometime. Soybean acreage is likely to go up by 6%. Cotton acreage is likely to be up by 7%. Corn is going to be down by 4%. But there are a number of analysts who believe that corn acreage may not actually decline by 4%. It will probably stay at about the same level as last year. And another factor that's going to keep corn prices weaker is the large inventory that is already available. And wheat acreage, of course, is expected to be down by 1%. Reports from Canada suggest that growers are likely to favor soybean, special crops, and pulses. And lentil and pea acreage may expand by 20%, particularly in Saskatchewan. That's the report which all of us have. Australia has been facing, in the last few weeks, weather uncertainties. And the latest report from Pulse Australia that I had suggested that the pulse acreage on the low side could be at about 1.37 million hectares, and on the high side could be about 1.61 million hectares. The point simply is that many of these major origins are already looking at weather uncertainties and are planning their crop pattern accordingly. This is my outlook for world pulses production. I'm expecting an increase in production in 2014-15, notwithstanding the looming threat of El Nino, notwithstanding weather concerns. Yet, I believe production, there is a great potential for production to increase, and production is most likely to go up in, I beg your pardon, sorry, 2014-15 vis-a-vis 2013. Here are some numbers. I'm expecting the dry bean production to be up by about 700,000 tons. Lentil production should be up by about 300,000 tons. And desi chickpea, of course, will also go up substantially. For the production, certainly is looking quite, I would say, consumer-friendly. There's going to be more production in 2014-15 vis-a-vis 2013-14. My estimate of the world trade in pulses, these are the numbers here. I'm again expecting a small increase in world pulses trade, particularly an increase in pea trade and also bean trade. This is important simply because these are crops which are going to be available in abundance over 2014 based on the crop outlook that I showed in the previous slide. And obviously, there's going to be more demand for these crops. I am not going to dwell at length on these simply because there are expert committees, expert panels which are going to discuss these crops very, very specifically. Okay. I'm going to very quietly again come back to the weather impact of 2014. The probability of El Nino is certainly rising by the day. Some regions obviously face much greater risk of facing the adverse consequences of El Nino, which is obviously dry conditions and less rainfall. But let me assure you, as of today, no one can say what's going to happen tomorrow. But as of today, the timing and the intensity of El Nino is unclear. But what is going to drive production, what's going to drive crop prospects is the timing and the intensity or the strength of El Nino. But we still don't know. That's a big, big question mark. And therefore, to assume an extreme situation would be rather risky. And to ignore El Nino would also be equally risky. And therefore, we are actually at the crossroads. And because El Nino is now developing, if it's confirmed, if El Nino is confirmed, and we don't know when it's likely to be confirmed, it's primarily going to affect Southeast Asia. And of course, it's going to affect India. The India Meteorological Department, at about 10 days ago, came up with the annual forecast for 2014 Southwest monsoon. And the IMD has said that India will have lower rainfall or below normal rainfall. India's average rainfall every year in the southwest monsoon season between June and September is 890 millimeters or 89 centimeters. And if we have rains which are 96% of this long period average, the IMD calls it normal rainfall. But the forecast that's given for 2014 is that the IMD expects 95% of the long period average, which is 1% lower than what can be called normal. And therefore, they have called it below normal. And I personally don't see any big difference between 95 and 96%. I'm taking an extreme case. Even assuming that the rainfall is 10% below normal, from 890 millimeters, assume that India has only 800 millimeters of rainfall between June and September. This is not a bad situation for India at all. 800 millimeters of rainfall, if the temporal and spatial distribution of rains is even across the country over a 4-month period, India should still be able to produce decent amount of what I call the kharif crops, including pulses. Our major kharif crops, obviously, of India are rice and a number of coarse grains, cotton, sugarcane, and oil seeds like soybean and groundnut. And therefore, while there is a forecast from the India Meteorological Department, it's actually at the very margins of being a normal or below normal. One wouldn't know how things are going to turn out. But there is also an expectation, there's a 60% probability that India will be struck by El Nino in the second half of the year. Now, in the second half of the year, will it be July, will it be August, will it be September? No one knows. Because we don't know the timing of how and when El Nino is going to strike. If it's going to strike sometime in September, I think Indian crops would be ready by then for harvest. And therefore, these are the kind of uncertainties that one must bear in mind. But what is important is, what is more important than what's going to happen in India is that El Nino, whenever Southeast Asia faces El Nino, there is enough empirical evidence that North America gets excellent weather conditions, very good rainfall, and very good temperatures for crops. If you analyze data of the last 20 years, 25 years, the US spring crops usually tend to outperform when the world when Asia faces El Nino. And therefore, I'm expecting a huge rebound in corn production in the United States and in North America in general. And North America is certainly going to face much better, much more friendly temperatures and much better precipitation than normal in the event that Southeast Asia and South Asia faces the adverse effects of El Nino. I want to show this map. What is this map? This map is South Asia. I want to talk about India, Pakistan, Bangladesh, and Sri Lanka. These are the 4 major countries in this region. And I would request, as those involved in pulses trade, look at this region as a whole. India, Pakistan, Bangladesh, and Sri Lanka. The population is in excess of 1.6 billion, which represents 23% of the world population of 7 billion today. And the GDP of these 4 nations is in excess of 1.8 trillion. And in fact, it's probably closer to 2 trillion now, given India's growth of last year, and which is about 3% of global GDP. But this is a region which is low on Human Development Index and very high on Global Hunger Index. And as Hakan mentioned in the morning in his presentation earlier, that some of the largest number of poor people in the world actually reside in South Asia and in India in particular. And that, I believe, should become the target it should become a target market for the world that produces and supplies pulses, which obviously are nutritious and high on protein. These economies are all consuming economies. Their per capita availability of food is currently low. They're home to a majority of the world's poor. They're nutritionally challenged, and there's enormous demographic pressure, but their economies are growing. And because their economies are growing, the per capita incomes are rising, there is a higher propensity to consume more. As the income starts to rise, people will eat more food until their food needs are satisfied. And as of now, their food needs are not satisfied. Therefore, there's still some way to go before we can say that the food needs of South Asia are satisfied. And therefore, that's where food demand is going to go up. And these are economies which I call are breaking out of the low-level equilibrium trap. They were all trapped in a low level of equilibrium in terms of production, consumption, and trade and investment. But now they are beginning to break out of the trap with rising investment, rising production, and rising consumption. And therefore, these markets have got to become the target for the world. Okay, allow me to come to India. Talk about India simply because India is the world's largest producer, processor, consumer of, and of course importer of pulses, and obviously you can't ignore India. You may love India, you may hate India, but you can't be indifferent to India. These are the numbers I thought I must mention to you. In the last 3 years, India's production has been rising by about 1 million tons and more. And our imports, of course, have also been rising simply because notwithstanding our increase in production, the demand for pulses is also increasing given rising incomes, expanding population, and of course, the ravenous appetite for consumption. I want to go to the last column, which is the demand column. These are projections made by the Planning Commission of the Government of India in October 2011. And you will see how these demand projections have been exceeded year after year. And therefore, the point I'm making is these projections projections actually understate the reality. And these projections are made with certain assumptions. And in my opinion, these projections do not take into account what I call the price elasticity and income elasticity. As incomes keep rising, people will consume more. And at lower prices, people will consume more. And therefore, we need to build in income elasticity and price elasticity when we look at demand. And therefore, this is a market, particularly India being a price-conscious market, at lower prices, obviously, there will be an increase in demand for all kinds of food products, including pulses. I want to show you this. This is actually, in some way, a very worrisome picture as far as I'm concerned. Sorry. The Indian Council of Medical Research has recommended, or recommends usually 25 kilograms of pulses per person per year for actually a sedentary worker. And it says that we need 28 to 30 kilograms for active persons. 25 kilograms per person per year means 2 kilograms per person per month. And look at the current availability of pulses. The current availability is only 13.6 kilograms. It's nearly half of what has been recommended by nutritionists and medical experts. Look at harvest of 19 million tons, imports of 3 million tons, about 22 million tons. You deduct seeding, milling loss, wastage, and the marketable surplus is about 17 million tons. Sorry. Divide that by the population and what you get is 13 and a half. I think this one slide must tell this house what is the potential of just one market, which is India. And if we did this exercise for various different countries, and I'm sure the global market potential is something which can be established, and I'm sure a research team in CISLs would do this exercise. Number one. Number two, I just want to, there is a fine print to what I'm saying. This 13.6 kilograms per capita availability in India actually masks a reality. And what is that reality? 25% of the population, which has fairly high levels of income, actually gets to consume more than 20 kilograms per capita. Whereas the bottom 30% of the population, which is really poor, probably consumes less than 6 or 7 kilograms per capita. And it is that bottom 30% of the population which is nutritionally challenged. It is that bottom 30% of the population which needs protein. It is that bottom 30% of the population which can't afford pulses. And therefore, the policies have to ensure that pulses are nutritious, pulses are delivered to ensure that there is no protein deficiency amongst about 400 million people. And therefore, there is a skew in consumption. And if you remove the skew in consumption and assume that the bottom 30 or 40% of the population gets to consume even 10 kilos, I think the demand projections will actually go haywire and probably go through the roof, if I may say that. Okay. I also want to suggest cost of protein, and this is typically under Indian conditions, because these are issues I believe this house, this very distinguished audience ought to know. Are pulses really inexpensive? This is a slide I've shown in different parts of the world and made out a case for reducing cost of production. Milk is the most expensive protein in India. Sorry. Then, of course, poultry and eggs. And of course, there are religious and other reservations about consuming poultry and eggs for protein. That leaves vegetable protein, and you have pulses, you have soybean and peanut. But look at peanut is today the cheapest protein available, followed, of course, by soybean. And look at pulses. Pulses are 2.5 times more expensive than soybean in terms of 100 grams of protein I'm talking about. If the world wants to promote consumption of pulses, particularly in developing economies like India, can the cost of protein be as high as 30 rupees per 100 grams? Why should anyone consume pulses? Why should they not consume peanuts and soybean for their protein requirement? That's the question we all have to think about. Yet, let me mention that India has a very long tradition and culture of consuming pulses. We talk about dal roti, we talk about dal chawal. When we say dal roti, it is dal and Indian wheat bread, and dal chawal is dal and rice. For whatever grain we eat, rice, dal goes with it. If we eat wheat bread, dal goes with it. And therefore, there is a tradition. And that's exactly where there is a market opportunity which needs to be captured. But that market opportunity can be captured if and only if pulses become really and genuinely affordable by the poor, and pulses are able to compete on price with soybean and with peanut in a highly price-conscious market. And I'm talking not just about India. This is an example. India I've taken as an example from a price perspective, but this I'm sure should be true of many other emerging economies, developing economies, which are the target market for the pulses trade. Okay. Therefore, high price of pulses obviously compromise the protein intake and dilute the already weak or frugal nutrition of the poor. Peanut and soybean are more economical. So how can pulses garner a better market share of the protein market in any of the major emerging economies? That's a question that must agitate all of us. That's a question that must engage all of us, must set all of us thinking about how do we make pulses a lot more affordable and a lot more accessible for the world's poor. I'm not sure how many of you know soy dal analog. There are now a few companies in India which have started to produce dal from soybean. Whether it will take off very well, I'm not very sure, but commercial production has started. There are companies which are willing to market, and there are food service companies which are willing to experiment with soy dal analog. Let me also mention personally, I used it and I wasn't satisfied. My wife wasn't satisfied cooking that, but yet at some stage, if it's price competitive, it's economical. If it's cheaper to buy soy dal analog, why should consumers pay a higher price for pulses? Why should they not go for soy dal analog? I think this is something all of us have to think about. Okay. Very quickly again, outlook for India, which is the Indian Meteorological Department has said is forecast a weak monsoon, but I'm not sure how far it's going to come true. By early June, the IMD will come back with another forecast for a regional dispersion of rainfall. We need to wait for it. But from a pulse production perspective, the Kharif production, which is planted in June and harvested in September, October, is only one-third of India's total pulses production. The other season is a Rabi season, which obviously accounts for two-thirds. And even a small shortfall in Kharif production may not really matter. It is PGNP and black mudpay and moong are the major Kharif crops. My own sense is that we are amidst elections and a new government should be in place by the 20th of this month. And for the new government, the priority will certainly be inflation control and food price control, and therefore the government will encourage imports to fight food inflation. I won't be surprised if the public sector undertakings are again asked to import pulses. Not that I'm a supporter of the PSUs. I know they messed up the market 3 years ago, but we don't know what the government would do. And therefore, the private sector has a lot a bigger role to play in ensuring continuous supply of pulses in the Indian market. The India Pulses and Grains Association is constantly engaged with the government, engaged with the policy makers to ensure a quantum jump in pulses consumption by ensuring that pulses are distributed to the poor through what is called the public distribution system. Okay. What is the conclusion? I want to say that the agriculture markets around the world, in my opinion, currently have priced in a worst-case scenario as far as weather is concerned. And that's why corn and soybean and cotton and wheat prices and coffee prices are up substantially. And they've priced in a worst-case scenario because of the weather risk. And obviously, the rally in grains currently carries a weather risk premium. Will this rally last, or will this rally burst, or will this balloon burst? We still don't know. How the weather pans out over the next 1 month or 2 months will, of course, remains to be seen. As my friend Andrew, he's fond of the statement, high tide will lift all boats, which is true, which is what happened in 2010, 11, and 12. Because of rising agriculture commodity prices, pulses prices were also rising. But this year, will the tide rise at all? Or if it rises, how high it will rise, we still don't know, because that's a big question mark. The downside risk to prices or correction to the current agriculture commodity prices actually would come through an expansion in North American production. It can potentially lead to a price correction. The longs will exist their positions. And my own expectation is that the US dollar, which is currently relatively weak at about 1.38 to the euro, will strengthen over the next 3 months to about 1.35. And by the end of the year, it should be 1.30. And a stronger dollar usually places a cap on agriculture commodity prices. And why should the dollar strengthen? Very simply because macro data coming out of the US are turning out increasingly positive, and obviously liquidity is going to be shrinking because of tapering. Okay. As far as India is concerned, obviously, as I said, the world's largest stakeholder. I'm expecting India will import bigger volumes. Not even if India were to have normal rainfall, notwithstanding the forecast, India will certainly import more in 2014-15, simply because of the sentimental factors. And over the next 6 months, I'm sure large imports are already have been planned. I understand that India has already contracted for not less than 600,000 tons of yellow pea from Canada, and of course other sources, 600,000 tons for August, September, October. I understand about 50,000 tons of lentil and about 80 to 100,000 tons of various other crops from Myanmar. These are already forward bookings done by India, and that actually coincides with India's festival season. We have a series of festivals in August, September, and October. Ramadan this year starts in July, a little early, and therefore the festival season should kick off in July and run through August, September, and October. And obviously, there will be a lot more consumption of a wide range of food commodities, including pulses. But my worry, as far as India is concerned, is the possibility of the rupee weakening. I'm not bullish on the rupee. I'm bullish on the dollar, but not on the rupee. If the rupee were to weaken, possibly it will have an impact on imports, and it will also raise the cost of imports, and that can potentially make the policymakers defensive. So we need to wait and watch how the new government is formed, who the ministers are, and what their thoughts would be. The Rabi crop prospects, the Rabi crops are planted in November, December, and harvested in Feb, March. It's too early to talk about the Rabi crops now. Much will depend on the subsoil moisture available in October and November. And therefore, I think we need to be focusing more on the Kharif crop from an Indian perspective. The question I want to leave all of you with is, if notwithstanding the weather concerns that currently engage us, if global agriculture crop production is going to be better in 2014 than what it was in 2013, obviously it will have a certain impact on prices, but will pulses defy gravity? If prices are generally, if agriculture commodity prices are going to weaken and going to move down, will pulses be able to defy gravity? I don't think they will. I think I'll stop here. Thank you very much. Good luck and God bless you all.